I'm going to be dropping some modules into the mentorship chat that is basically going to break down the way that I trade and the way that I'm posting signals. But that's the thing, I know it can get quite confusing, especially for some of you that are just joining this whole trading industry. You know, everywhere online, someone is always telling you something different. Everyone always claims that their way of trading is better. I don't claim that my way is the highway. However, I do definitely have a system that does work, and it has worked for a bunch of other people as well. And so that's what I'm sort of trying to teach through my live streams, and we'll also be dropping some videos in the Discord breaking everything down. But basically, to summarize everything, the way that I trade and the way that I'm posting signals in the Discord, whenever I send a screenshot of a setup, okay, I will never, what I preach is that this group, it's not a group where I'm just gonna tell you to just buy or sell randomly, right? Because there is a bunch of signal groups, Discord groups around in the trading space that all they tell their clients is just to buy or sell simply. Hello, 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 who's that? Marius, what's up, brother? What's up, what's up? Okay, so whenever what's up? Yes, Marius?
I finished the fishing and I'm going home now.
You're fishing every day.
Almost, yeah. Now it's too hot, and when you stay on the lake, it's very, very nice.
Alright. Anyways,
I'm gonna listen a little bit.
Yeah. Listen up. Listen up.
Okay.
So, I was just saying the way that I post my basically my signals, in a way you could call it that if you want to, is that I will always at the start of every day in the morning, okay, I will drop the charts of what I believe is going to happen during the day, or what are the setups that I think I'm currently looking at, right? And this will typically be how I'm going to be sending out the zones, right? I either will have, depending on where the price is, I will be marking out my sell zones if I'm expecting shorts that day, okay, or I will be marking out buy zones if I'm expecting for some longs, okay? And now how do I find these? Basically, the way that I trade is that I combine multiple different confluences together. So some of you may already be familiar with some of these concepts, right? So I trade using Fibonacci retracements, okay? Trade using order blocks, fair value gaps, inverse fair value gaps as well, equilibrium. What else? Also, yo.
It was good, bro.
Yo, Seven, what's up? What's up?
There's so many people joining right now, crazy.
yeah, we got some good motion tonight.
Holy shit. Wow. That's nice.
Fibs, order blocks, FEG, equilibrium. We also use session highs and lows. We use monthly highs / lows. Make sure you guys are muted so that I'm not rebounding. If you guys want to say something, unmute yourself. Weekly highs and lows, and daily highs and lows. Daily highs and lows. Basically, what these are confluences. Okay, so a strategy is made up of confluences. Okay, a strategy is just basically like the umbrella name to everything that falls underneath it, right? Everyone has their own little specific ways that forms their strategy. For me, the way that I trade is I like to basically find levels on the chart where these confluences, right? Each one of these is called a confluence, okay? And together, right, they form key levels, which are levels on the chart where I'm expecting price to react from. Okay, now usually whenever I mark out my buy zones or sell zones, okay, I will usually leave a text like this: daily order block, 0.5 fib, and this is in the daily leg. Okay, these are 3 different types of confluences which are currently lining up at this exact level. Okay, so when price is to come into this buy zone, okay, I'm not gonna just be entering buys straight away. Okay, this is just, you guys can have this level on the chart and be prepared. Maybe you guys can even set alerts and, you know, watch what price does once we enter these zones, because obviously the whole point of being in a group like this, guys, is to obviously develop this skill for yourself and to also end up trading on your own at some point in the future, right? And me just giving you buy or sell zones the minute that you're supposed to enter the trade, it's not going to be beneficial, right? So I always try my best to give you guys in advance where I'm expecting price to go and what I'm expecting to do once price reaches our zones. Okay, and every single time that I'm sending out these charts, right, there's always the levels on the right hand side. For example, here this buy zone shows 464 and 480. So you can easily mark these out on your chart, either draw the lines out yourself or just set an alert at the top of this area so you'll be alerted, right? Because not every single time also I will be on the charts. There is going to be some times where price is going to react off these zones and I'm not going to be paying attention. So once you guys will understand my entry model and how I trade, and you guys will become a bit more experienced, you can end up taking these trades even when I'm not there to tell you buy or sell, right? That's sort of what the goal and what I'm trying to transition in, for you guys to be independent traders on your own, so that you can then pass this skill on to whoever also wants to learn into the future. Okay, I doubt that every single person, well, one of you guys is in here just to be taking pure signals. Obviously that is the bonus of being in a group and in a community, already taking trades from people that have experience, but the goal is to learn the skill for yourself. And I feel like the best way is to give you these zones in advance so that you can watch how price reacts in them. For example, this buy zone that we gave today, right, we can see price came into it absolutely perfectly. We wicked into it and then we ended up pushing up. I personally wasn't checking the charts during this time because it happened pretty late. Usually I like to trade always the first 2 hours of a new session. So London session opens up at 9 UK time, I believe. So I usually trade from 9 till, 11:30 max in the morning, and then I'm hopping off the charts. Okay, I don't care what happens after 11:30. It's not my problem because it's not in the way that I trade. And that's also another thing, guys. You don't want to become slaves to the chart. Okay, you want to develop a system, right? Well, the way that I trade is that I know that my setups happen always within the first 2 hours to 2 hours and a half of a session open. That basically allows you to free up your day to do other things, because the goal of trading is to gain freedom and to gain time and take control of your time back again. So if we're spending all day on the charts, right, that defeats the point. Okay, so that's why the first 2 hours and a half of a session is where you want to be the most curious and be looking for trades. Okay, anything that happens after that, you don't care. Okay, you don't care because you know that the conditions are not in your favor, and the best type of conditions are when our strategy, our setup is matching with time. You always want to align time with price all the time, because that's going to give you your best sort of entries and your best sort of setups and where the most volume is going to occur. Recently, this week, it has been an exception. Okay, this week, this is why I've been struggling this week and why I haven't taken a trade yet till Thursday, is because most of the moves have been happening outside of session times. And so this is just one of those weeks where I almost need to adapt a little bit to the conditions, because there's been a lot of high impact news happening with the war kickstarting again, with Trump tweeting left, right and center, and there is going to be times in the market and there is going to be some months where we do need to slightly adapt our way of trading. However, that takes time, so that's why I've taken these 3 days to basically learn and understand how price is moving, and I'm realizing that market is actually moving a little bit later nowadays. Not sure why, but that's just how it is, right? And that's why price has been reacting off our buy zones really well. We just haven't been able to execute on. Okay, now in terms of these buy zones, whenever we enter a buy zone or a sell zone, what do? Okay, the minute that we enter these zones, I always scale down to the 5 minute first thing, because the 5 minute is my execution time frame. Okay, that is where I am looking for my entries, right? The first thing that I am doing the moment that I see price tapping into my zone is I am waiting for it to form a high. Okay, what is, for example, if we're looking for longs, I'm talking about longs. So if I'm looking for longs, right, I'm obviously expecting price to come up. Okay, so what am I watching? I'm watching for price to form a high. Okay, what is a high? A high is an up candle followed by a down candle. Okay, this is also a very, very key concept that you guys need to be able to learn and to spot how to find highs and lows in the market. Okay, and since we're learning how to read price action with no fancy indicators, with no fancy extra bullshit, right, just pure price action, okay, the way that we spot highs and lows in the market is by reading the candles. Okay, and so a high is an up move, okay, depending on what color on the candle of candles you have on your chart, right? A high is an up move, so an up candle followed by a down candle. Okay, up candle followed by a down candle, that's a high. So in my case, it's a blue candle followed by a black candle. This is what forms a high. Okay, what is a low? A low is the opposite. It's a black candle followed by a blue candle. Okay, let me write this down quickly on the screen so that for those of you guys that are visual learners. So how to spot highs and lows in the market. Okay, so a high is an up move candle followed by a down move candle. Okay, a low is a down move followed by an up move. Wait, is it easier if I say move or candle? What do you guys understand better? You guys understand better if I say a low is a down move followed by an up move, or a low is a down candle followed by an up candle? What makes more sense for you guys?
I was thinking when you're saying move, or when you say move, is that just one candle itself, or can the move be a couple of candles down?
No, just one candle. So I'll say a low is a down candle followed by an up candle. Okay, so for example, this is where my Picasso skills are gonna come out. Let me see. I'm gonna do it with the basic green and red, because that's what the beginners, that's what our minds associate up moves and down moves. So
You are really Picasso now.
it's not too bad actually. Why is this thing extending to the right? I don't want it to extend. There we go. I don't want it to extend. Come back, man. Jesus. Center. I want it to center. Why is it not centered? Anyways, this. No. Let's do it. Okay. Boom. This is a high. Okay. Up candle followed by a down candle. This is what a high is. Okay. Now, let me just do the same thing for a low. Oh. This is some fat boys.
And another thing that confused me was the wicks at the top. Does it matter the size of the wicks when you're trying to identify the highs and the lows?
So when it comes to our entries, right, I'll later explain why the highs and low, why I'm looking for a high and why I'm looking for a low. But basically, with candlesticks, the wicks are what do the damage, okay, and the bodies is what tells us the story. Basically, wicks do the damage and the bodies tell us the story. Okay, so for example, look, this wick, this candle, we tapped into this area, into our buy zone. Okay, this wick shows that price, okay, traveled all the way here at some point, right? At some point in time during this 5 minute, because we're on the 5 minute time frame. During these 5 minutes, there was a point where this candle was filled all the way to the downside. Okay, however, what did price do? It ended up rejecting this level and closing higher. Okay, forming, this is one of the candles called a hammer. Okay, so this basically shows us that price is rejecting this area, right? Because the wicks did the damage, right? It did the damage hitting the area, but the bodies tell us the story, because the story is that we're rejecting this area because we closed higher, right? If the body of the candle would have closed all the way down here, right, then we would expect that this area, this support area, right, this buy zone wouldn't have held, right, and would have probably continued going lower, right? That is what we would have expected, because the wicks, the bodies would have told us that we are not, the wicks would have told us that we are not rejecting this zone. So the chances of us continuing lower would have been higher. Okay, but since this wick here, we came down and we closed above, it shows us this area is getting respected. So, you know, we're expecting price to reverse. Obviously, we're not going to be looking for buys just because we see a candle that has rejected with a wick, but basically just to tell you that, you know, we don't really want to be paying attention too much to the wicks, but more of how the body of the candle closes. Okay, one of the let me see, candlestick chart. So this is some really basic shit, right? But some of you guys is the perfect starting point, right? You don't need to understand every single one of these candles, okay? You don't. I'm just trying to see how I can fucking open it in. Okay, so we don't really need to, okay, ignore the three soldiers. We don't give a shit about the three soldiers. We don't give a shit about the three crows. Okay, we don't really give a shit about the morning star or the evening star. Okay, we do care about what a bearish and bullish engulfing is. Okay, this is a pattern that you want to learn. Basically, a bearish engulfing just means that the bearish candle is eating the bullish candle, right? So it shows us that the sellers are stronger than the buyers, right? Same on the opposite side for a bullish engulfing, right? The buyers are stronger than the sellers because the buying candle, right, the green candle is bigger than the red. It is engulfing it, basically eating it up. Okay, that can be useful for example, when you're looking for longs. Okay, you want to be looking for bearish engulfing candles, okay, rather than bearish engulfing candles, right? For example, I mean, you know, it's just don't really be looking too big into that, right? To be fair, don't really actually ignore that shit. Okay, ignore that shit. It's just useful to know, but ignore that stuff. Really, the most important ones are going to be these, right? Are they going to be the dojis, okay, because these are basically indecision candles. When you see dojis, it means that the buyers and sellers don't really know where to go, right? Because look, there is sellers pushing price down, and there is buyers pushing price up. And in the end, the body of the candle closes in the middle. So it's called an indecision candle, right? When you see dojis, it usually means you want to wait, right? You want to wait for some more confirmation because the market is still not sure where it wants to go, okay? Then you want to obviously see the hammers, right? The hammers is what I just showed you, which is like this, right? This is not the biggest hammer, but it is a hammer nevertheless, right? This is also a hammer here. You can see, look, the wick went all the way down and closed above high, right? That is a form of hammer. That shows that price is currently rejecting a level and wanting to push up higher, okay? And this also is on the opposite side called a shooting star, right? You can obviously name these however you want. These are just the trading terms that it was given, right? But this is what a shooting star is. What it basically is just a hammer, but for the sellers, right? So instead of us watching for a hammer at support, right, at resistance, okay, what do we look for? Shooting stars. For example, this is a shooting star. What does it show? Price came up to a zone, it rejected it, the body candle closed below, and what did price do after? We sold off, okay? Even here, look, price rejected this area. What followed after? Downside, right? Even here at resistance, look, shooting star, price came up, did the damage, the wicks did the damage, the body tells us that we're rejecting this area. What follows? Downside, okay? So candlesticks, as much as you don't want to be, you know, screwing your head in with them, they are still useful to sort of understand, okay? So with this thing, I'll put this into the Discord now. I'll put this into the Discord now, and I'll put it in the education education section. Where is the education section? Trading education. Motherfucker. I'm gonna say ignore everything except shooting star, hammer, doji, and I guess we can put bearish and bullish engulfing, but bearish and engulfing. Okay, ignore everything except shooting star, hammer, doji, bearish, engulfing. There we go. Say, learn to spot these on the chart. Okay. So yeah, basically does that answer your candle question, Karen?
Yeah, that's brilliant. Thanks so much.
Okay. And okay, so going back to what we were saying, how to spot highs and lows, right? A high is an up move followed by a down move, okay, and a low is a down move followed by an up move, by an up candle, sorry. There we go. Okay. So, let me take a screenshot of that. Put it into the education chat. Okay. So, now that you guys understand this, okay, going back to when price taps our buy zones or sell zones, we wait for a 5-minute break of structure, okay, 5 minutes break of structure. So what does that mean? It means on the 5-minute time frames we get a break of structure. A break of structure is BOS, okay, BOS, break of structure. 5-minute break of structure. BOS is when a candle body closes above a high or a low. This yellow's bugging me out. Okay. When a candle closes, okay, above. Well, let me actually do this. Entry criteria. There we go. From buy/sell zones. Okay, first step, as we said, number 1, 5-minute break of structure. Break of structure. Okay, so we're scaling down to the 5-minute time frame and we are waiting for what? When a candle body closes above a high or low. So if we're looking for longs, we're only looking at the highs. Okay, we're waiting for a high to be formed. Okay, look, price taps into our buy zone with this candle. Okay, what is the first thing that you need to be thinking? Have we created a high yet? Okay, for now, the most recent high, right, that was created previous to this candle touching our zone was up here, right? This was our most recent high. Okay, there was no up candle followed by a down candle anywhere here. This was our most recent high. Okay, but then we get a second candle, another black candle, no high being created because for the first high we need to wait for a green candle or a blue candle. Okay, then the third candle happened. We finally got a blue candle. Okay, so what needs to follow after the blue candle? We need to have a black candle, and boom, we just have our first high that was created after we tapped into our zone. Right here. Okay, so now what am I waiting for? I am waiting for a 5-minute candle to close above this high. Not a wick, a close. Okay, you're gonna see a lot of times, sometimes price is gonna come up above a high and it's not gonna close, right? It just does that to trick traders to thinking that price is gonna reverse, but in the end it just sweeps it and continues lower. So always wait for the 5-minute candle to close and to make sure. Okay, as you can see here with this candle, we finally got that 5-minute break of structure. Okay, so this technically is our first step to being really interested in potentially taking a trade from our zone. Okay, so entry criteria. First step, 5-minute break of structure when a candle body closes above a high or low. Okay, do I need to precise that it has to be on the 5-minute, or do you guys understand because I said 5-minute break of structure? You guys understand?
Yeah.
Okay. Now.
Yeah, man. It's okay. It's already saying over there. If you can do it a little bit too high, the number, the words.
Can you not see it?
Yeah, I can see. But it's a little bit too small. I think.
Too small?
Yeah, that's fine. Now it's much more better. Now in that position you can see the 5 minutes as well.
Guys, please do let me know if there is like anything that you want me, if you want to stop me, please do, please feel free. Okay, like I'm just freestyling. I'm assuming that you guys are understanding everything. If there is one objection, this is what it's for. You know, you tell me, hey Spiky, can you go over that again? Or I don't understand this. You know, please, it's supposed to be interactive. So if everything is good, we proceed. So, entry, all good with the 5-minute break of structure. Do you guys understand a break of structure? What I mean by it?
Yeah.
Yeah. Okay. Now the
Can I
next.
just add something on the back of that?
Yeah.
Obviously, I'm kind of new to it, but I know Neo uses an indicator, that Lux Algo Smart Money Concept one. It does help with identifying break of structure as well, if obviously someone is struggling with it.
I mean, yes, but then again, you know, we try to not have to depend on an indicator to read the market, right? Because yes, you can use an indicator to when you want to first start learning, but then you're just going to become dependent and lazy and on this indicator, and it's might as well, you know, start off reading it with pure price action. And then the beautiful part about this is also, bro, like let's say you're at a family dinner, or you're at I don't know, outside with your friends, and then a friend of you comes to you and says, hey bro, I heard that you just got into trading, what do you think about this chart, can you read this for me? And you're like, oh no bro, let me just wait for my Lux Algo break of structure indicator, otherwise I can't read your chart. You know, you sound ridiculous, right? So you might as well learn it from the start and actually see how it looks like on the, you know, in real life in the chart, so that you can start training your eye for it, right? You're not going to become perfect straight off the bat, but the goal is with reading price action is that you can read any market in the world, any market, forex, crypto, oils, anything you want, because you're learning how to read price action without anything extra. So of course you can use an indicator if you really want to, right? However, I don't recommend it. But appreciate it. Second step is, after we get the break of structure, there is going to be some times where we are going to be entering straight off the break, right? We are going to be entering straight off the break, and we're always going to be putting our stop loss below the low, okay? However, there is going to be times, for example, after price has been selling off for a long time, right? We're not going to just be entering off a 5-minute break straight away, okay? Because that is a little bit risky, especially because we are taking a trade counter trend, okay? In this case, it would have worked out and it would have given us a really good entry, but there is times that sometimes the market will break structure to the upside on the 5-minute or to the downside, and then we will tap into some sort of fair value gap or some sort of order block, and we will reverse and get stopped out, right? A break of structure doesn't automatically guarantee that price is just going to keep ripping in the direction from there, okay? But it's definitely a first good step in the right direction, okay? If I am waiting for more confirmation, the second thing that I want to wait for is an inverse, okay? An inverse. Boom. So what is that? It's a fair inverse. How do I write it? Inverse, fair value gap inverse, or just say, yeah, fair value gap inverse. I'd say that makes more sense. A fair value gap inverse, right? So what does that mean? Obviously, in the market, okay, price leaves bullish fair value gaps and price leaves bearish fair value gaps, okay? These are all fair value gaps. If you guys don't know what fair value gaps are, okay, I have touched on this a lot into my live streams, but basically, oh, the fuck, motherfucker. What chart were we on, man? Fuck. Oh, there we go. Fair value gaps are a 3 candlestick pattern, right? There's going to be bullish fair value gaps and there's going to be bearish fair value gaps, okay? How to spot them? A bearish fair value gap, we're going to do a whole lesson of this. And also, guys, each one of these concepts, I'm going to be dropping a video model explaining individually each one of them, right? Every single concept of my strategy, I'm going to break down into individual videos, and so you guys can pay attention to and watch those if you need to work on one specific concept. Right here, I'm just giving you a brief, quick overview, okay? Fair value gap is a 3 candlestick pattern, okay? It is when, in a bearish scenario, it's when the first candle, bottom wick, doesn't touch the third candle, top wick. okay, leaving this gap, okay? Ideally, when the market leaves a fair value gap, okay, in the bearish side, what do we expect? We expect price to come into it, okay, and continue selling off lower, right? Because this is a seller's fair value gap, right? Same for the buyer's sense, okay, same for the buyer's sense. Instead of it being the first candle bottom wick, it's the first candle top wick, right? Because it's just the opposite, right? So the first candle top wick doesn't touch the third candle bottom wick, leaving a gap. Okay, at first, these guys, they happen small and big, right? The smaller ones can be a little bit harder to spot, but then your eye is gonna get trained over time, okay? But the same scenario is, if price was to come into them, okay, what would we expect? We'd expect the buyers to step back into the market and continue pushing price up higher, right? Which is what happened in this case. We tapped into the gap and we continue pushing up price higher. So, in order for our entry, right, instead of just looking for a fair value gap, we are waiting for these fair value gaps to get inversed. Okay, so what does it mean? It means, right, so if there is a bearish fair value gap, okay, for example here, the sellers created a bearish fair value gap, and we want to look for longs, right, we want price to go in the opposite direction. What do we want to wait for? We want to wait for a bullish candle to close above this bearish gap, right? Making it an inverse, right? Inversing. We close above the bulls close above a bearish gap, making it an inverse, okay? Showing us that the bulls, the buyers, are stronger than the sellers at this current moment, okay? Because this fair value gap here is the only thing really that could push price lower, right? Price could have broken structure here. We could have tapped into this 5-minute fair value gap and continued selling off lower, right? However, the buyers were stronger at this point, so we ended up closing above it, okay? And now we know, okay, we broke structure on the 5-minute, we inversed all the bearish fair value gaps that were on the, in front of us, and so now price is finally ready to continue pushing up higher, okay? So we wait for a 5-minute. Bro, press this fucking thing, please. Please press this thing. 5-minute fair value gap. 5-minute FVG inverse. Okay, this is for we're doing longs here, so how do we write this down for the longs? There we go. Long scenario. 5-minute FVG inverse. Okay, so we are waiting for buyers to close above a bearish fair value gap. Wait for buyers to close above a bearish fair value gap. Okay, the most recent, above the most recent. There is going to be times, guys, where there isn't going to be a fair value gap here, right? Sometimes the nearest bearish fair value gap, okay, is going to be all the way up here. Okay, so are we going to be waiting for price to come up all the way here and close above it? Obviously not, right? Because this is already far enough that we could already be entering off our 5-minute break of structure, and we can use this first 5-minute as our take profit one. Okay, and once this 5-minute gets hit, what can we do? We can then move our stop loss at break even so that we are protected. Okay, so in case price decides to come down, right, we will not get stopped out and this trade will be risk free, and we will just get stopped out at break even, and then we could potentially look for another entry. Okay, so obviously this is only applicable if there is a fair value gaps near our entry zone. Okay, if our break of structure happened here, right, as we marked out here, if our break of structure happens here, but we have a 5-minute fair value gap right here, we're not going to enter until this gets closed above, right, which we would have seen. We tapped into it once with this candle, right? What did we form? A shooting star, so potentially telling us that price wanted to reject lower. Okay, but then the next candle, what did it do? It formed a hammer, So it counteracted the shooting star, showing us that we actually are respecting this area and want to push up higher, right? And what do the next candles do? We ended up following up. And so with this candle here, this is the candle that closed above the 5-minute fair value gap, right? This one nearly did, right? You can see this candle nearly did. We wicked up above it, but we didn't close above the area. It has to close exactly above the fair value gap, completely inversing it, engulfing it, whatever you want to call it, okay? This is the candlestick that did it. So we finally say, okay, we got the 5-minute break of structure, we got the 5-minute inverse, okay, what's next, right? What's next? Now you have to realize, guys, that the more you wait for confirmation, right, the less good your entry is going to be, right? And that is sort of the battle that you constantly want to be fighting whenever you want to enter a trade. You always want to get the best risk to reward possible, right? And you want to always try get the best entry possible. Okay, there is going to be some times where price is just going to come too high up that your entry and your risk to reward and your stop loss placement isn't good anymore. So the trade basically went off without us. Now, is that a problem? No, because we are waiting for our entry criteria, we're waiting for our strategy. So if the trade ends up going without us, that's fine, right? It just wasn't our money to take, okay? At least we were still patient and we were still waiting for our signs to enter the trade. Okay, you have to trust your analysis and trust yourself to be able to find another trade. Okay, it's not the end of the world. It's not the end of the world. The amount of trades that I've missed in my career, it's insane. I couldn't even count them on my hands, that's for sure. Okay, now, once we got the 5-minute inverse, what's the next step? Okay, this is where we really start refining the entry. Okay, for you, those of you guys that are beginners here, who have never traded this way before, I would just recommend that you just use the 5-minute break of structure to test out your entries, okay? Don't worry about the 5-minute inverse for now, and don't worry about what I'm going to explain now as well, because that's just going to confuse you even more, right? But if once you realize and once you actually understand these concepts, you're going to realize that it's actually easier than you think. It's just that this is new to you, right? Like anything. So always make sure that there is always a 5-minute break of structure, but don't worry about the other entry complement. If you want to go for it and do the full step entry process, go for it, okay? But it's okay to also just enter off the 5-minute break of structure. I did that also for very many years and it works very well. It works very well, okay? Because we are not just entering off some random fucking zones, right? These zones are zones that I'm marking out, of zones that are filled with key levels, filled with confluences. So the chances that price is going to push off these is very high, okay? Not every single zone, obviously, I mark out gets respected, but most of them do, right? Most of them do. Then the next step is, okay, where are we? Right now we're up here. We haven't entered the trade yet, right? We have not entered the, let me remove this shit because we've already went through this. Just okay, boom, there we go. Okay, so let's just mark this out. What did we get? We had the 5-minute break of structure right here. Top on the right. 5-minute break of structure. Okay, then here we got five-minute inverse. Okay, with this candle.
Mikey,
Yeah,
can you hear me?
yes.
If we are talking about long scenarios, can you please make it a little bit clear about the break of structure? The 5-minute candle body closes above a high or a low. So we are just talking about a 5-minute break
long
of
scenario.
structure
Yeah, above
on a
a high.
long scenario
Yeah, you're right.
above a high.
You're right. Good spot. Good spot. Okay, 5-minute break of structure when a candle body closes above a high. When a bullish candle, yeah.
Okay.
When a bullish candle body closes above a high. Okay, 5-minute inverse. Wait.
Thank you.
Does this make sense for the wait for buyers to close above the most recent bearish fair value gap? Yeah, I think that does make sense. Okay, so we got the 5-minute inverse here. Okay, next step is waiting. Since we inversed a bearish fair value gap, right? Now, what do we need to wait for? We need to wait for the buyers to create their own fair value gap, right? If the buyers inversed the sellers and they want to keep pushing price higher, right now the buyers need to create their own fair value gap in order to use that as a launch pad to continue higher. Okay, fair value gaps are used as launch pads. Okay, so in order for price to continue up higher, what did the buyers need to do? Create their own fair value gap. So that's our step 3. Okay, wait for a bullish 5-minute fair value gap FVG to get formed. Okay, which we got right here. Look, the moment after we got this 5-minute inverse, okay, what did the price do? We created a 5-minute fair value gap right here. This is what I'm saying. Your eyes need to be trained for it. But look, the first candle, top wick, doesn't touch the third candle, bottom wick. It left the gap. Okay, there we go. So that's step 3, right? That's step 3. Wait for a bullish 5-minute fair value gap to get formed, and wait for a 5-minute fair value to get formed, and wait for a tap back into it. Okay, so here we see that a fair value gap, the new 5-minute got formed. Okay, the next candle after this was formed, we came straight into it. Okay, so the moment that price comes and taps into this new 5-minute gap that we've been created, okay, we scale down to the 1 minute. This is where it gets juicy. See, this is how we're refining it from beginner to advanced. Okay, that's why I'm saying don't worry about these next concepts, but guys, this is how you can start getting the best fucking entries and the most precise fucking entries with the best sort of risk to reward that you could possibly get, because you are literally waiting step by step for price to do the exact entry criteria that you want, and then you're going to be able to execute, and put your stop loss in the right place. You're going to see. Hopefully we are going to get an entry off this, guys. I just picked this example randomly, and somehow it literally has every single fucking part of our entry confluence, of our entry criteria. The only thing that's missing is the fact that it happened late into a session, so that's why we didn't actually end up taking this trade, right? But that's what I'm saying. Going back to what I was saying, I just need to adapt myself for this week because movements are happening way later in the day, right? But you'll be surprised how often this plays out, right? Wait for a bullish 5-minute fair value to get formed, and wait for a tap back into it. Okay, then scale to the 1 minute. Okay, when I mean scale, I mean go to it, right? But I can say then go. It's probably simpler terms. Then go to the 1 minute time frame. Okay, there we go. Okay, we have just tapped into this 1 minute fair value gap, into this 5-minute fair value gap. Okay, let me mark this out. 5-minute inverse. Boom. No. 5-minute new here. Let's say new 5-minute fair value gap that was created. Why is this not bold like it was before? There we go. I don't want the border. Okay, new 5 minute, we got the 5 minute break of structure, we got the 5 minute inverse, new 5 minute fair value gap created. What do we do now? We scale to the 1 minute. Scale to the 1 minute. This is where it gets fun. Okay, now on the 1 minute time frame, what do? We repeat step 2. We wait for a 1 minute inverse, right? Before we waited for a 5 minute inverse, but now we wait for a 1 minute inverse or a 1 minute break of structure. It depends, okay? It depends. So for example, look, we tapped into this 1 minute fair value gap, into this 5 minute fair value gap that we just created, right here. Okay, what am I watching? I'm watching for a high to be formed, okay? As I said, what is a high? An up candle followed by a down candle. So the moment that we tap into it, right here, where is this candle? Right, we tap into it here. Boom. Okay. We are watching. Wait, is this the high? 1 second. 1 second, guys. Bear with me. I'm trying to see with which candle did we tap into it from. We tapped into it with this one. Let me mark it out. Boom. Yeah, exactly what I thought. Okay, we tapped into the 5 minute fair value gap right here. Okay, in this, with this candle here. So what are we watching? We are watching for a 1 minute break of structure, okay, or a 1 minute inverse. So I'm waiting for a high to be created. Okay, right here, look, we create an up candle followed by a down candle and we made a high. Okay, what did we get? We got a candlestick on the 1 minute closing above a high. So technically this would have been our entry. Right? Technically, this would have been our entry. Okay? So we would have entered here. Okay? And now in terms of our stop loss placement, since we've waited for so much confirmation, right? You don't want to be putting it straight below this low, right? Because you always want to be giving price, you know, a decent space so that you avoid getting stopped out for no reason, right? But you want to, you know, put it below a safe place, right? So we're not going to put our stop loss below this low, right? Why are we not going to do that? Because there is a 1 minute fair value gap literally right here, right? So price might want to come into this, tap it, okay, and then continue up higher. So that would just cause us to lose this trade for nothing, which would be unfortunate. Right, so you want to put your stop loss below, right, the point where if this trade was to come any lower, your idea wouldn't be right anymore. So, right, so we are covering this 1 minute gap in case price wants to come down, and we are putting it below this low. You always want to put your stop loss below a low, okay, or below a high if you're looking for shorts, right, below structure, before a structure point. You never want to put your stop loss randomly in the middle of something, always below a low or below a high. Okay, obviously the lower we put it, right, the worse our risk to reward is. So we want to find a balance. Okay, that's also a skill in itself. One skill is reading the market, another skill is being able to know how to enter and where to put your stop loss. There is two parts of trading, right? The beautiful part about it is once you nail your analysis and once you nail your execution, you've done your job as a trader, right? Because then it should become easy, because it's just a matter of waiting for price to either hit your stop loss or either hit your take profit. You've done your job, right? People think that once they enter a trade, that's when the job starts, and that's where they start getting emotional and say, oh shit, I see price coming towards my stop loss. Should I move it lower? Should I move this? Oh, I see price coming towards my TP. Do you think I should extend it? I honestly think that price might continue higher. Look at this bullish move up. All this mental bullshit that you try to tell yourself to convince yourself that your way is the right way, when in reality, the right thing is just to leave your fucking trade alone. The moment you enter, you put your stop loss and you put your take profit, and you don't touch that shit until either of those levels get hit, okay? You don't touch that shit. If that means closing the fucking app, going for a walk, going to the beach, drinking a cocktail, having a glass of wine, watching the TV, going play video games, whatever you want. Go live your life. You've done the hard part, you've entered your trade. So what you want to do is you want to set an alert at where your take profit is going to be, and you want to set your an alert at where your stop loss is going to be. And you don't fucking check that shit until you get a notification from TradingView telling you that one of these two levels get hit. Because you don't care what happens in between from the moment you enter the trade. You don't care. Price could come all the way close to your stop loss, but you're not going to give a shit because you're not going to be looking at the chart, right? If price could even come to your TP so close and not hit it, but you don't care, right? You only care once either one of these levels are hit, okay? Because trust me, the moment that you start managing your trade is when your emotions, they start getting the better of you, okay? And it's gonna really be a fucking nightmare. It really is gonna be a fucking nightmare. Trust me, I went through that and it's a pain, right? Because there's gonna be times when you're gonna manage your trade and then it ends up going against you, right? There's gonna be times when you decided to move your stop loss lower, right? Because you think that price is gonna reject from one of these levels, and it never rejects, and then you end up getting stopped out, and you end up getting stopped out for double your loss, right? There's gonna be times when you say, oh, let me put my stop loss a little bit tighter because, you know, I'm not too confident about this trade. And what does price do? It literally taps your stop loss and then continues going up higher. But if you would have just left your stop loss in the right place from the beginning, you would have still been in the trade, right? So many little things like that you can avoid by just leaving the fucking trade alone, okay? And that is some very big source, which I'm battling right now because I'm fucking taking all my trades on live stream. So I have to watch my trades play out, right? Before, when I wasn't, you know, public about my trades, I used to literally go and live my life as soon as I entered the trade, and I felt so much more peace of mind. Now I'm making my life even harder because I have to watch the charts. But you guys don't have to do that, right? Let me take that shit on, but you guys don't, because you guys don't have to run a community and you guys don't have to go and trade live. So as soon as you enter the trade, go live your life. Okay, that is what trading is too. It's supposed to be enjoyed. Okay. Now, there we go. Pretty much that's the entry criteria. So wait, step 4 is wait for a bullish 5 minutes to get formed and wait for a tap back into it. Then go to the 1 minute time frame. Okay, wait for a 1 minute break of structure or a 1 minute inverse. Okay, in this case, guys, we had no fair value gaps to inverse, right? There was no fair value gaps here that we had to inverse. If there was a 1 minute fair value gap here, we would have waited for price to close above it, right? But there was no fair value gap, so we didn't wait for an inverse. We just waited for a break of structure. Okay, wait for a 1 minute break of structure, a 1 minute inverse for entry. Okay, then you put stop loss. Okay, stop loss below a structural point, right? When I mean about it below a structural point, right, it just means basically below a low, right? Below a low. Look, what is a low? As we already identified, a low is a down candle followed by an up candle, right? So this is where you put your stop loss. Okay, you can even put it here. You can even put it here. Okay, it just depends. As I said, though, you don't want to make it too low because then your risk to reward is not that good, right? For example, if our first take profit, right, was this 5 minute fair value gap, which would have made sense, right? Which would have made sense. I'm going to make another video, another session where we're going to go over take profit targets and stuff, because otherwise it's going to be too long and you guys are going to have way too much information overload. Okay, but this would have probably been our first take profit, right? Because it's a 5 minute fair value gap. So at the first take profit level, you always want your risk to reward to be at least a 1-to-1. Okay, here you can see, look, it's a 0.74, so not a 1-to-1 yet. Okay, if we were to put our stop loss tighter, watch this number go up. Look, right now it's a 1-to-1 right here. With my stop loss below this low, it's pretty much a 1-to-1. So we say, okay, this is a good point, I'm happy. It's at least a 1-to-1, so it means that if we're risking 100 euros, okay, at TP1, we will be up 100 euros, right? 1 to 1. If we're risking 1,000, we will be up 1,000 here, okay? And usually at take profit 1, we always take out 50%. Anyways, we'll go through take profits later on, okay? But there we go. So that's also how you want to mark out where you want to put your stop loss. You always want to make sure that when I enter a trade, guys, I'm going to show you. I'm going to tell you TP1, TP2, TP3, TP4. No, usually we don't do TP4s, fuck that shit. But we just do TP1, TP2, TP3. Okay? So you guys won't have to do this for yourself, but you'll be able to see, right? The question I want you to think in your mind is, why is Spiky having TP1 here? Okay, do we have at least a 1-to-1 risk to reward ratio to TP1? Okay, these are the sort of thoughts that you want to be having in your mind when I'm giving you take profit targets, right? Even when I'm giving you stop loss, when I'm telling you where to put your stop loss, right? You want to say, why is Spiky putting a stop loss here, right? Are we protected? Are we below the low? Is he covering a 1 minute fair value gap? Is there a reason why it's this low, right? Sometimes I'll tell you we're having a bigger stop loss. I'll tell you why. Okay, these are all the sort of questions that you need to be thinking in your mind so that eventually you'll be able to operate and think on your own. Okay. So yeah, that's pretty much it. Like, that's pretty much it. If this was happening during session time, then this would have been our trade. This would have been our trade. We would have hit TP1, and then as you can see, you know, look guys, look how fucking refined our entry is. We literally, doing this entry model, right, you save yourself so much drawdown. If you do this right, you save yourself so much drawdown because you're literally entering at the point where price should rip, right? It should continue in your direction if you do it right, okay? And obviously if market is in your favor and if the idea of the trade is right, the drawdown should be minimal. That's why it's a beautiful entry criteria, because you're waiting for extra confirmation, and the moment that you get in, you get paid. And you don't have to suffer the emotional baggage of standing hours and minutes into drawdown, right? There is going to be some times where obviously price will come down towards our stop loss. That's normal, right? But most of the time, we're entering at the exact time where price should rip. And you can see price just fucking ripped up. And, you know, this would have been an absolute fucking huge humongous trade, right? We probably wouldn't have held it all the way here, right? I usually close out my trades at a 1 to 3 because that's all you need. 1 to 3 is what you need to have. You hit a consistent 1 to 3 risk to reward ratio trade. You know, it's the key to having a profitable system, right? If you're always going for big RR, right, you have the risk that price will come next to your take profit and then reverse all the way back down to your entry level. Okay, obviously after our take profit 1 gets hit, we always move our stop loss to our entry level, always. Okay, because this is called risk management. We protect our capital, right? If price comes back down and takes us out our entry level, we don't lose any more money, right? We don't lose any money. It's a W, right? We still manage to have the same balance as before, right? So what can we do? We can then maybe look for a re-entry, or if we don't see a re-entry, we can just wait another day and get a better trade. Okay, so always manage your risk. After you take some profit out, always put your stop loss at break even. Okay. And then, doesn't mean that at a 1 to 3 risk to reward, we're going to be taking out our full position, right? We always leave some sort of small position running. For example, at a 1 to 3, we will take maybe 80-90% out of our trade, okay? And we will leave maybe 10% in case price ends up, you know, continuing pushing up higher, and so we can make some extra money, right? Because sometimes we will be catching the absolute perfect bottom and the absolute perfect top of a trade, of the move, and if we catch the top or the bottom, there's a chance that price is going to continue going in our direction for a long time because we're catching the top of a move. So we do want to leave always a small position running for those bigger moves, because sometimes those extra couple pips, those extra trades that end up running really far, those can end up eating our losses that we've taken in the past, right? So you always want to leave a small position. And yeah, let me take a screenshot of that, guys, and I'd say that's fucking it, man. That's literally it. Jesus Christ. Boom, 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 boom. That's our entry model. Now let's see how we can write this in a way that's fucking easy to understand. Okay. Is there a way to make this smaller? I wish I could make this smaller. I didn't say things, I got you. Right. Is that pretty clear, guys? How many people we still got in here?
Yes.
9 people. Let's go. Let's go. 5
Yeah, I'm
minutes.
just wondering, are you going to save this video somewhere so we can rewatch it again?
Yes, this is all recorded.
Yeah, because it was very good. Thanks very much.
thank you.
Oh fuck, guys, my fingers got cramps. I can't even screenshot. 1 sec. Oh shit, let me write this down. The fact that this is a buy zone. Let me write this down. Buy zone. Right. Okay, well, that's pretty much it, I guess. Now, how are you guys feeling after that? You guys feeling pretty cooked, or should we save the should we do another call tomorrow and then we go over the sell zone, or do you guys have time to, or have the brain capacity to do the sell zone today? Because the sell zone is basically, you know, it's the same concept just reversed, basically, right? It's just same concept just reversed. I can't hear you, brother.
Hello, I'm happy to do with the sell zone today.
Do the sell zone today?
Yeah, I'm happy to, yeah.
Are you guys happy to as well?
Yes.
I'll pop for myself personally, but I'll watch the recording back.
Okay.
Well, thank you very much, and see you later on.
Yeah, of course, mate. I hope that was valuable to you, brother.
No, it's very valuable. I think it was it K26 who was asking about what videos to watch. There's one in the video recording. It's which one was it? I think it was the 18th of the 6th, 26. That's one video I do recommend.
From my live streams.
Yeah, from your live stream.
Yeah, amazing. I'll go over them again. I really liked this video, so I have to rewatch it. That's why I think I'm gonna just leave now, because I think my brain has too
Yeah,
much information.
that's what I imagine, guys. Like, this was information overload. So
Yeah.
but
I do want to go over this video again because it was very valuable.
let's why don't we just do the sell zone tomorrow, guys? I'll do an extra coaching call for you guys. Usually it's Friday, but we'll do one tomorrow, and we'll also do one on Friday, just so that everyone can become fresh. Actually, fuck it, I'll do it both. I'll do both. I'll do tonight and also on Friday again for these guys that can. Let me just get some water. One sec, guys. Just going to the toilet. Yo. Oh my goodness. What a session. Let's check, are we still good? Still recording? Yes. Oh, shut the fuck up. I hope that this thing was... This thing better have been fucking recording everything. Oh yeah, it has. Hopefully it was. Yeah, this thing better have been fucking recording. Jesus. Okay, let's print this. How many people we still got in here? Six. Who would it go? Cat.
Yo, broski.
Yo, Bree. Yo, brother.
Yo,
Yo, G.
yo, real quick, if you could help me out with the MT5.
Yeah.
Because, bro, yeah, it's a new platform for me, you know, and yeah, I don't really know shit about it. So,
Yes.
I mean, I do have my account connected, the funded account, the 10K. But, yeah, bro.
Tonight during
Let's
the
see.
call, if you talk about how to make sure my funded account is fully connected to MG5, and also how to set up drawing alarms, TP alarms, SL alarms on MT5. You can't set alarms on MT5 broski, but you can set them on TradingView. There is no
Oh yeah, that I know how to do.
there is
The
no
future of
option
human
there is no
longevity
option to set alarms on MT5.
starts here.
But did you see when I was setting alarms for
Yeah.
TP and stop loss? Did you see? Did you find? Did you see how I did it? You want to press the
Yeah,
top.
yeah.
The plus. Add alert.
Yeah, I have them set up in.
Okay, perfect. Connected account is fully connected to MT5. And in terms of your funded account, in order for it to be fully connected to MT5, well, you should have got your login details via email, right?
Yeah. Also, if I have my balance on MT5 from the funded, is that a confirmation? Like the 10K?
If you have a balance, sorry, say it again, bro. If you have a balance on your MT5, confirmation for what?
That my funded account is fully connected. For example, I see on my MT5, I see 10K.
Yes.
Is that confirmation?
Yes, brother. That shows that you did it right. That you have the account, of course.
Okay.
Yes, brother.
Also, I've been having trouble finding NQ. So, I looked it up on chat. It's not giving me shit. And yeah, honestly, maybe it's funding pips. I don't really know. They do CFD only, I think, but I'm not sure. I don't really know.
Have you typed in NDX?
Oh yeah, I did check it out, but it doesn't have the same price, nor the same candles. You know, I don't think it's the right one, is it?
NDX USD.
Yeah, I've checked it out, but it doesn't have the same.
Well, how much different though? 'Cause if we're
price.
talking about just a little bit, then it's fine. Are we talking a big difference or just? A little
Let me
bit?
check.
Nasdaq, like for
I
example.
think it's a quite. I mean, to me, it's a big difference. A bit over $10, I think.
What's the price right now on NDX?
Let me check. Uh, 29,169.
Well, this is 29,202, 201. So
Yeah, that means I cannot trade Nasdaq anymore.
no, you can. You can, bro.
Sure. I mean, that means I gotta find another one. I mean,
the
trading
the candlesticks probably look relatively similar, no? They look the same, right?
Yep. Yeah.
Yeah, so it doesn't matter. Doesn't matter. Like the candlesticks are right here, right now. You're here, yeah, with the 1 minute break like this. They look the same on the 1 minute chart.
Wait, let me check. Let me move to the one. Okay, let me check. Oh yeah. It's the same.
Yeah, well, perfect. Yeah, you can, bro. There we go. So add NDX to your watch list.
I bet. Thanks, bro.
And then
Yeah, I think that's it.
that's all good.
Yeah. Thanks, bro.
Gotcha, brother. And also, like on the prop firms, you can see that when you go on the part where you look for your trade, you can see a bunch of different assets, right? It's probably crowded with shit. Make sure you fucking delete all of them and you only keep the pairs that you trade. Okay, that just basically.
Yeah, I did.
Yeah. Okay. Nice. Okay, there we go, bro. You should be all sorted. All good.
Yes, sir. Thank you.
Fuck yeah. Any other questions before I go into how to take trades off my sell zones, like any other quicker, because the sell zone is going to be the next long segment. But this is also going to be a video module that I'm going to put into my strategy section, or like in the Discord tutorial, so that when people first join, they're going to be able to understand how to read my chart zones. That's why I wanted to also go through it with more in depth. Does anyone have any more like shorter or quick fix questions that I can go through before I start? It's coming up to midnight here, so I don't want to push it too long.
What is Nasdaq called on Vantage?
NAS 100.
Is it the NAS 100? Okay, yeah, then it's the right pair.
Yeah, NAS 100. NAS 100 dot NAS 100 ft.r.
Okay, all right, thank you.
Yo, Spiky,
Yo, broski.
is this gonna be uploaded on YouTube, in the Discord?
In the Discord, but also on YouTube as well. Because in order for me to upload it on
Alright,
YouTube, in order for me to upload it on YouTube, I need to upload. Sorry, in order for me to upload it on Discord, I need to upload it on YouTube first.
Alright, what's your YouTube?
Spiky TV. You should see some live streams that I uploaded as well. TikTok currently bugged me out of the live stream, so I can't download any more of my live streams for some reason. So I'm talking to support to see how hopefully to fix that. So there is like 3 or 4 live streams behind. That's why I haven't been uploading the recent ones into the group, because I haven't been able to download them. I have them all saved, but I just can't download them.
Can you send me a link to your channel? I'll find it.
Yeah. View your channel. I'll put it in the trade chat. Oh. Motherfucker.
It can feel like the end of the world when you don't have the right video assets. So that's why I really...
Okay. Nice legends. Come on, load. Anyone else? Wayne, you said something as well.
Yeah, I was the one asking for the YouTube channel.
Okay, sweet.
Oh, the question I had was like, can you show me live, like, your strategy, like in a live trade, but you don't gotta like go in the trade and just show it live where you expect it to go.
Like my entry criteria, like I just did here before, or what do you mean by that question?
Yeah, but in a live trade, like, you're already explaining low key, but could you like show it in a live trade, like in a live market? Like,
Well, when I
expectation
actually enter the
previously.
trade, well, I usually enter the trades on the live stream, so you'll be able to see that.
Yeah, you don't. The thing is, you don't gotta go in the trade. Just like make an expectation with the strategy. You just showed us, and then let's see if it like actually work or not. But if the expectation is good, you get what I mean.
Were you here when I did the whole how to enter off the buy zones?
Yeah, I was.
When I drafted that the trade setup on gold, where I was like, this is where we'd have our TPs, blah 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 blah. Is that?
Yeah, all the screenshots, right? Yeah, I was. Like 20 minutes ago, right?
Yeah. Like,
Yeah, I was.
I mean, I don't have the replay tool on TradingView, unfortunately. I don't have the premium, so I can't go back in time. That's the only thing. I'm gonna invest into that soon. I just never have really had the need to have TradingView premium, but I guess now for the Discord, even sharing my charts and also going back in time for you guys to maybe if you guys have a trade that you want me to check out, what you could have done potentially better, where you could have put your stop loss better in case you got stopped out, blah blah blah, I can go back in time and I can show you what I would have done. I think that's also can be valuable for you guys. But as of right now, I can't do that, unfortunately. But as I showed you before, like entering off the buy zone, I would have entered off where I would have showed you, right, off that 1 minute break inside of this 5 minute fair value gap, and then our TP1 would have been this 5 minute gap, and I would have closed out at a 1, 2, 3. Right. For example, even on the trade today on Nasdaq, in the Discord, when I was posting my signals here, I was waiting for this buy zone to get tapped, okay, on Nasdaq, and I was expecting, I said in the group, my vision for Nasdaq, we just reversed the bearish 1 hour, we just inversed the bearish 1 hour, we're now coming back into it, we have a 5 minute fair value gap where I would like price to react from for some buys targeting 29227. Alright, so my TP target for Nasdaq was 29227. Okay, we were looking for longs inside of this 5 minute fair value gap. Okay, we never ended up getting our entry confirmation that we needed. Okay, inside of here, right? We never ended up getting our 5 minute break of structure, so we never ended up entering. Right, step 2 of waiting for our entry is a 5 minute break of structure. These were the highs that we created up here, and we never ended up getting a candlestick closure above it. Right, so no entry, no entry, no entry, no entry, no entry, no entry, until price came back down all the way down to these lows here, right? But at this point it was already super late, right? And I hadn't marked out the zone because I wasn't checking out the charts. But look at this, the moment that we get a 5 minute break of structure, right? The moment that we tap this area, what am I waiting for? I'm waiting for a high to be created. Did we form a high here? No, we didn't. This is the highest point, but this is not a high. Why? Because the next candle is a blue candle. It's supposed to be black. So this is still not a high that's being formed, right? Then we make a blue candle. The next candle is a black. So this is the high right here. Okay, so we wait for a candlestick closure above it. We get it, the 5 minute break of structure right here. Okay, so technically this would have been the entry. However, why would we have not entered this probably? Because look, we also had a 5 minute bearish fair value gap right here. So yes, we would have got the 5 minute break of structure. However, this fair value gap could have been respected and we could have come down and pushed down lower. Okay, so what I would have waited for is I would have waited for this 5 minute fair value gap to get inversed. Okay, which we would have inversed it with this candle here, right? Which is already a huge fucking candle. Like, we're looking to enter this trade and price is already all the way up here. That's cooked. That's fucking cooked because our entry is already fucked, right? So ideally, what would we have waited for? We would have waited for price to retrace into a 5 minute fair value gap, right? Step 3, wait for a retrace into the new 5 minute gap, and we never got that. Price just skyrocketed all the way up, and so in the end, we would have ended up not being able to enter this trade, right? So that would have been how this trade would have gone, right? Usually, if price would have then come back inside of this 5 minute gap, we would have got a retrace. We would have then scaled into the 1 minute, right? Waited for a 1 minute break of structure, a 1 minute inverse, and then we would have gone long from here, right? But we never would have got that. So that's just an example of us missing out on the trade, which is just unfortunate. It's just unfortunate, right? However, if we wanted to be a little bit risky, right, then we could have just entered off this 5 minute break. Right, and in that case, then we would have printed. Our stop loss would have been below the low. Okay, there is no other low that has been formed. If we're entering off a 5 minute break, right, you always want to put your stop loss below the low. Okay, there's no low being formed here. This is the only low, right? Down candle followed by an up candle, right here. So this would have been our stop loss. Our TP1 would have been at these highs. Okay, for at least a 1-to-1. You see a 1 to 1.9. So this would have been a valid TP1. The moment that price would have hit this, we would have moved our stop loss to our entry level. So this is officially a risk-free trade. Okay, and our second take profit would have been the area that we were looking at, 29227, which is here, 29227. You can see we hit that area perfectly, and now price is just fucking stalling. All right, so that target would have been valid, and this would have been the trade. All right, 2 TPs, bang. Makes sense?
Yeah, it does.
Oh, 1 second, guys. I'm gonna be fucking pissed. I'm gonna be fucking pissed if this is if everything that I was talking about wasn't shown. Oh, I'm gonna be fucking pissed.